Coming up, how genuine are supermarket deals? The Reserve Bank meets to discuss interest rates and the ASX breaks its 7-day winning streak. The details next. It is your daily 10-minute business and finance news wrap for this Monday, the 23rd of September 2024. The Australian share market fell today by 0.7%. We'll have the details with David Scutt from City Index. But first, to the ACCC, which is taking Coles and Woolworths to court over claims of misleading discount pricing on hundreds of everyday items. It is alleging, at times, those supermarket chains temporarily inflated prices on some products before cutting them and applying their down and prices dropped promotions. So how can you tell if you have a genuine deal at supermarkets? For more, Naveen Razik spoke with Rosie Thomas from Consumer Group Choice.
We're really pleased to see the ACCC taking Coles and Woolworths to court for allegedly misleading discount claims. We've been looking closely at this area for about a year, and what we've found highlights that consumers are not only confused by the terms used by the supermarkets, but also that the frequent changes in prices make it very hard to know if you're getting a genuine discount or not.
How lucrative are these specials and promotions for these big supermarket companies?
We don't know exactly how much, but we can guess that it's significant. And the ACCC has indicated that they expect that both the major supermarkets have made significant revenue from these promotional practices. The ABS has also released data to suggest that items that are discounted or on promotion are significantly more likely to sell. So I think we can reasonably infer that the supermarkets have made quite a lot of money from these practices.
So for customers listening and watching, what can you do to make sure you're not being ripped off?
The best thing to do is to focus on the unit price on a pricing label. So that's the numbers that are often quite small next to the price that tells you what the price is per 100 grams or per item. Comparing these prices is the best and most objective way to make sure you're getting value for money at the supermarket.
That is Rosie Thomas there from Choice, speaking with SBS's Naveen Razik. Now, Coles says that the price increase happened when it was receiving a large number of cost price increases from suppliers, but intends to defend the proceedings. Now, for Coles, the ACCC has issues with the promotions between February 2022 and May 2023, while Woolies says it is reviewing the claims, but shares in both of those companies fell by more than 3% each, and it happened on a day where the Australian share market also declined, the S&P ASX 200 off by
A couple of factors out there at the moment. We've seen some weakness in iron ore prices coming through. That's definitely impacting the iron ore miners. But from a technical perspective, I think also the seeds were sown for this decline on Friday. We had a big reversal pattern that took place, and we're seeing some follow-through selling today. I would point out, though, that it is a public holiday in Japan, so volumes are fairly light. So don't really trust the price signals too much at the moment.
The RBA board commenced its 2-day meeting today, a decision out tomorrow. What's the market expecting? We'll see. And what are the chances of a rate cut down the track?
I think we're going to see pretty much a repeat of what we've seen in prior RBA meetings. The board has got not enough information to go and feel confident enough as yet that the inflation trajectory is on a path back towards target. So it's going to go and continue that pretty hawkish message that we've seen. So no change to the rate. Cash rate will remain at 4.35%. And when it comes to the path of interest rates moving forward, I know a lot of people are excited by the fact that the Federal Reserve cut 50 basis points last week, but the RBA has made it very clear that they're looking for multiple inflation reports to get confidence in that inflation outlook. And that tells me that it wants to go and see at least the Q3 report and the Q4 report, which takes us into the early parts of next year. So unless we see a really sharp uptick in unemployment in Australia or some kind of global outturn or downturn, I imagine that we're going to see the RBA on hold for the time being.
You mentioned that iron ore price earlier, but the Australian dollar is above 68 US at a near 2024 year high. What's going on there?
Really interesting, because lots of pessimism out there about China in particular, and we saw Chinese policymakers today cut the 14-day reverse repo rate. but a lot of it seems to be driven by what's going on in the Asia FX space. So the Chinese yuan is being very influential. It's actually fallen or strengthened to the strongest level against the US dollar in a couple of years. And the Aussie dollar is starting to show that same kind of impetus as well. So a lot of it comes down to what's going on when it comes to China's currency. And more broadly, the bigger factor is what's going on with the US interest rate outlook. That's really starting to go and hinder the US dollar strength at the moment.
So now that we are seeing global rates falling, particularly in the US, we know the US Federal Reserve has suggested rates will continue to fall over the next year or so. Does this change the investment outlook? I mean, what are the opportunities for investors at the moment?
It's a great question, and it's something that everyone needs to be asking right now. And I'm going to be pretty boring in my assessment because I think right now, outside of gold and precious metals, which I'd feel comfortable buying, even though they're at record highs at the moment, we've reached a point where we've got the Fed cutting, we've got a whole bunch of hope that's being priced into asset prices that they'll be able to go and deliver a soft landing. But that's not a given. And we've seen lots of cycles in the past where every single time they start out to go and try and deliver a soft landing, and it doesn't take place. So for me, cash looks okay right now. You're still earning a decent return above inflation, and it gives you the time to go and see whether the hype about the soft landing is actually justified.
This SBS On The Money stream is provided for informational purposes only. The content in this stream should not be understood as constituting advice or a recommendation. It is not personal advice and it does not consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decision.